So all around me in this room right here are charts. There's charts here, 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 there's charts. There's a lot of charts on all of these different computer screens. There's a lot of different, there's futures, there's equities, there's cryptocurrency. There's a lot of charts inside of this little room right here that I'm looking at every single day. But I will tell you that there's one indicator that is on all of these charts. Every single chart that I have pulled up that I'm looking at every single day, I only have one indicator on those charts. And I'm going to talk about that one indicator that I've talked about a million times, but I'm trying to get across to everybody out there who doesn't understand that this one indicator is really the number one most important indicator that you should have on your chart, just like me. All right, so looking at some examples, I made a video very recently talking about how I went back and I looked at all the top gappers and basically looked how the VWAP and the high of day and all those things was interacting with the stock, and how those stocks that tested the VWAP, how those ended up at the end of the day. Now, IGC is a pretty good example of that this morning, how this thing, as soon as it kind of like was battling all morning long, let me find it, all morning long kind of battling here at the VWAP, had a couple little breaks above it, and then once it finally got going, it just went nuts, and it got all the way up to 205, getting halted multiple times. Now, I'm not saying that was like the best breakout ever over the VWAP, blah, 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 but what you can see here is throughout the rest of the day, the VWAP really was crucial as a support area. You can see here at 11 o'clock, bouncing there from between basically $1.39, $1.36 area, a little low, $1.30. But in general, that VWAP, really was the big touch or big support, really was the big support of the day. When you look at the 5-minute chart, you can see how this thing touched down there multiple times to the VWAP here in the morning, here again, and, never really got close to it ever again. But still kind of overall, you can see we were above the VWAP. We stayed bullish. The stock is now still squeezing. I don't know. Look at this thing. 295 million shares traded on this stock today. I don't know what is going on. I was blown away this morning when I was live watching it, but still, it's just mind-blowing to see that it's now at $2.60 after this morning starting the day out there at $1. So who knows? Sometimes that's how it goes. But as you can see, again, guys, the VWAP so important. Now someone's gonna say, well, look, it didn't pull back to the VWAP later in the day, so it's not as it's not that must not be that important. But what I want to stress here is early in the move here, before really getting that good breakout, you can see how that VWAP was so important there, and the VWAP really did kind of ended up letting this thing, I guess, take off. If you kind of look back here and you draw some lines on it and you really just kind of look at it. Would you just look at it? You can see basically the VWAP here, right? This support area, the VWAP right there, and then getting that breakout of that flag, getting up there to 180, and then squeezing all the way up there to 256. But that's beside the point. What I really want to talk about here is why I like the VWAP so much, not just for trading these types of stocks. For trading the small cap stocks, for me, what I like to think about here is if the stock is above the VWAP, it's bullish. If it's below the VWAP, it's bearish. It's that simple. There's no rhymer, there's no like middle area. It's basically above the VWAP, it's bullish. Below the VWAP, it's bearish. I don't care what you say. I don't care what your theory is here. That's the way I look at it. It's very simple. Very, very simple. I don't short anything above the VWAP, and I don't get long anything below the VWAP. You know what? It's a rule to have, and I think it's a very simple idea when you're looking at the overall trend. It'll stop you. It'll stop you from shorting a stock that's bullish. It'll stop you from trying to buy the dip on a stock that's bearish. So a lot of times when a stock dips below the VWAP, when it starts to use the VWAP as resistance, when those things start happening, that's something to consider. Maybe, wow, the stock is now turning bearish. Oh, wow, hey, the stock is bouncing multiple times. It's staying above the VWAP for the majority of the move. It's probably bullish. That's very, very cut and dry. But what I want to point out here is if you look at the SPY, I think the VWAP is probably one of the most important indicators that you can use for trading futures and for really trading the overall market with the SPY, different ETFs and things like that. So as you can see here, this morning, the SPY kind of riding the VWAP out of open, a little bit of a bounce, a little bit of a pullback right there. We zoom in, just kind of looking as this day went on here. All right, so as you can see here, we get above the VWAP. We turn that VWAP area into support there. Very clear that this turned into support here, or right there above that previous little resistance, turning into support and going higher. But as you can see, what was something that was very clear in this move, and I talked about this live. I talked about it during the live stream, how I was just like, man, something about this move here. Okay, we squeeze up there to the 337 area on the SPY. And remember, the SPY is basically looking at the overall market with all the S&P companies, the S&P 500. That's what the SPY is basically tracking. So the SPY is tracking all these top companies across the index, across the S&P, and basically you have a basket of stocks, the overall market. So the way I look at it is basically, if all of these stocks are squeezing higher, they're just squeezing, they're just going crazy, they're going to the moon, right? The market's going crazy. If that's happening, well, okay, cool, it's happening. That's great. But as you can see here, it got to a point where it got crazy, right? It got all the way up here to the 337.80 area, 337.80 area, right? It gets all the way up here, up to this resistance there at the 338? No, 337.80 area, which was previous resistance from the other day. But in general, you can see how we're just a little far. We're a little far from that VWAP. We just never got that clean touch. We got overextended, even more overextended at that point. And I said during the live stream, I said, man, this thing, the SPY, it likes to touch the VWAP. It just likes to touch it. It's like a magnet. Like this, if the SPY is below the VWAP, it just likes to go back up and touch it before moving down. Like that's just how the market moves, because that's the overall volume weighted average price. So you got to think, this is not like rocket science. This is not like some type of magical indicator. This is basically just looking at the overall volume weighted average price of these 100 different companies in the S&P, these 500 different companies in the S&P that are making up the really the overall market. So like I said, I was really thinking that the SPY wanted to pull back to the VWAP, which it ended up doing. And you can see, guess what happened? It bounced off the VWAP. And you might say, well, Patrick, when do I buy? When is the time to buy? For me, it would have been very simple. I would have just waited for really like the first good green candle to get back above the VWAP and then start to move higher. And as you can see, this little green candle right here closed on the 5-minute chart, closed right there above the VWAP, had a nice full candle body, or whatever you want to call it. Very, a good bullish green candle there. Just a good overall candle right there. Bam. All right. We got you just call it the 3-bar. I don't know, is that 3-bar play? I don't think it's 3-bar. But in general, you can see that overall just kind of resists support there at the VWAP. But look at how important this is, though, guys. This thing gets really kind of just overextended. It consolidates at that previous level. And guess what? End of the day, it wanted to get back down to that VWAP one more time. So that's something to think about. If the market starts to gets overextended, if it goes from here to here without any pullback, we should expect a pullback to that VWAP before making the move higher. It's not right. I know I keep saying that it's not rocket science, but a lot of people make this very, very much rocket science. And trust me, guys, I know in hindsight, it's easy to sit here and point out all of these different things. But in general, the rule, the final rule, the end all be all rule here always kind of just works out. Even when the market's choppy, even when the market's just not showing us opportunities, same idea. Like I said earlier, if I'm looking at this, if I'm looking at it like, okay, below the VWAP, the price action is bearish. Above the VWAP, the price action is bullish. So that rule is simple. You guys can take that. That's free for everybody who's watching. Free for you guys. For everybody else, you got to pay for that information. But in general, it's simple. We like to think that the overall market kind of moves in these waves, right? The overall market moves in waves. This is something that we don't even need to worry about even arguing about here, because the market likes to go up, it likes to pull back, it likes to go up, it likes to pull back, it likes to go up, it likes to pull back. And we get these overall trends, and we get these channels that the market moves in. Very, Very cut and dry, right? Very cut and dry there. Same thing. If the market's moving down, we get these moves back up. We get these moves back up. The market moves in these channels. Very, very simple premise. So again, like I said, very simple premise. When the market is SPY, whatever stock you're trading, when it's above the VWAP, I'm calling bullish. When it's below the VWAP, I'm calling bearish. In general, I'm just living with this one simple premise. I think the VWAP is the most powerful indicator that you can use for day trading futures, for using anything. For futures, equities, cryptocurrency, whatever you want. It's all there. VWAP is simple. The thing about the VWAP as well is that a lot of times the standard indicator that most platforms give you, just most people just don't even know what they're doing. They see a line on a chart. That line ends up being what? That line ends up being the VWAP. And guess what? Now that you have this universal indicator, when everyone's using that same indicator on every single chart, on every single different time frame, and everyone's seeing the VWAP, the VWAP, the VWAP, but everyone's seeing that, well, guess what? It's making that indicator that much stronger if everyone is looking at that same exact indicator. So when the people see that the market pulls back to a support area at the VWAP, they're like, hey, there's a chance I'm going to buy the dip here, right? There's a chance I might buy the dip. And they end up doing that based on this universal indicator, the VWAP. So if you guys haven't already, do me one big favor, hit that like button, the subscribe button, all the buttons down below. I'll talk to you guys later on.